Thank you everybody for joining this webinar. I hope everyone is seeing me and hearing me well. My name is Sarah. I'm an immigration lawyer in Portugal. We work with the Golden Visa since the beginning of the program, so 2012, a long time ago. We have already went through a lot of changes in the program, and we are used to guide clients through those changes. Today we will do a short presentation of the main highlights of the program, already under the most updated law, okay, that was recently introduced in Portugal. So we will explain you the topics that you should be aware of and the main details that should make the difference in your decision. To start, it's always good to remember that the Portuguese Golden Visa program continues to be the most flexible one in Europe. Why? Because it's a residency permit program against an investment in Portugal that gives you 5 years of temporary residency in Portugal, which means no tax impact, no physical presence required besides the 7 days a year, with the possibility of family reunification without restrictions, which includes spouse, parents, parents-in-law, children, even if adult, if they compromise with three requirements of studying, being economically dependent and single. After those 5 years of the Golden Visa, that is the only period where you have to hold your investment, you are granted with permanent residency, the Golden Permanent Residency, which basically continues to offer the same flexibility and gives you the bridge to access citizenship within 10 years in total. That will be not only Portuguese citizenship, but also European citizenship. So, in a nutshell, the Golden Visa program is basically for non-European citizens, okay? Investors that are seeking for a EU residency edge, families that are planning multi-generation access to Europe because from the moment that you hold the Portuguese passport, of course, you can pass it to your generations, and is also a good option for financial diversification. And here we are seeing a lot of interest from United States because of everything that's going on in the world. It's always good to have here something to diversify in terms of investments. With the Portuguese Golden Visa, what you will get is a residency permit, a residency permit at year one that will be then renewed every 2 years. And then at year five, you apply for the permanent residency card. That is a 5 years card, so less bureaucracy in terms of renewals. That card, the Portuguese Golden Visa, and also the PR, the permanent residency, gives you free movement in the 29 countries of the Schengen area, so it can be used as a touristic visa. Important, as I highlighted before, this is very objective in the perspective that with one investment, you can have the residency cards and future the passport for all of your family, which means, again, spouse, parents, parents-in-law, children, if adults. For some reason, I'm not seeing the PowerPoint anymore. I don't know if you are hearing me. Emily?
Yes, we can hear you, and we can still see the PowerPoint. I think everyone can still.
Really? Okay, I'm not.
Yes.
So give me just a second because the computer does not show the PowerPoint. Okay.
It's just not loving you today, is it?
Yeah, exactly. It returned. Perfect.
Okay, great.
So, to end this slide, the qualifying investment at this moment that is selected by more than 90% of the investors is the investment in Portuguese funds, okay? The requirements here are simple. The Portuguese funds, they need to be established in Portugal, licensed by the Portuguese regulator that is called CMVM. They need to have a maturity period of 5 years from the moment that you are applying. If you want, you can diversify. And there are a lot of options to consider it according to your profile of investor. And also important, we can have a Portuguese tax number without having tax encumbrances in Portugal because you have the tax number for purpose of investment, but you will be qualified as non-tax payer, which means that you have no tax obligations in Portugal, provided that you don't have any further income or returns in Portugal besides the ones coming from the fund. And now we can skip. Let me see if I, okay, perfect. So, in terms of steps, the program is very objective. However, the devil, besides wearing Prada, is also in the details. So, it's important to be cautious of all the details and to be guided into the specificities and bureaucracy of the program because immigration is always a burden in terms of paperwork and diligences and formalities that needs to be complied. And one formality missing can jeopardize the entire application. So we usually divide this into 5 steps. The step number one is the pre-file. Basically, is where you are a kind of a compliance where you'll be qualified for purpose of immigration application and for purpose of the fund investment. The step number two will be the online application, and for this you will be represented by a lawyer in Portugal. This also means that you can do the entire application without coming to Portugal because you will have a legal representative to deal with that. And only at step number three, you are required as well as your family to come to Portugal for purpose of collecting the biometrics. And those biometrics are basically the ones that will be used to produce the cards because although we call this golden visa process, is not a visa that is stamped in the passport, is actually a card, a residency card that will be granted for you and each of your family members. Um, which leads us to step number four, the card itself. As I mentioned before, it will be a 2 years card. It's renewed every 2 years. As soon as you have 5 complete years, you can apply for the 5 years card, and then it will lead you at year 10 to the application to citizenship. The documentation is very simple and objective. Passport for American applicants, FBI background check. It needs to be apostilled. For those of you that don't know what is an apostille is, it's basically kind of a notarization. It's done in US, but needs is a different notarization because is under the International Convention of Hague. That means that the documents issued in US will be valid in Europe, namely in Portugal before the immigration office. Besides that, when we apply, we already need to have the proof of qualifying investment. So, for clarification, you need to do the investment and then we are in position to make the application. The taxpayer number and the Portuguese bank account are also requirements, are part of the legal services. For those of you that are not yet familiarized with the names, NIF is the Portuguese tax number. And depending if you are doing the program with your family, spouse, or children or parents, marriage birth certificates will be needed for their cases. In terms of costs, you have here a small calculation. This is something for you to have the big perspective on what you have to invest in this program. Usually, the investment that you are doing between legal fees and fees to the immigration office should be covered by the returns of the fund. So it will be a neutral investment or eventually an investment with profit depending on the performance of the fund. We can go for it. Exactly. Also important because taxes are also one of the topics that can have a huge concern for applicants. So in Portugal, by standard rule, we have three kind of tax situations. The non-resident, that's basically someone doing the program without the intent of relocating to Portugal. So will not spend here more than 183 days, will not declare Portugal as the main center of interests. And for those, there are no taxation in the refund in the income coming from the fund. So 0% income tax on the fund, 0% in foreign source because you are not declaring here your taxes. There are no taxes in wealth or inheritance, but the fact that you are doing the Portuguese investments and the investment that is a financial investment means that you need to declare it in US. So it's always important cooperation with your local tax advisor. Then we have a different situation. And let me skip for the left side or the right side of the PowerPoint. So we were speaking about the non-resident. Now let me speak about the most standard, that is the resident. That one is someone that is willing to relocate to Portugal. And from the moment that relocates to Portugal, then you need to declare here worldwide income. In that perspective, our flat rates, our tax rates are progressive. They come from the 14% up to the 28 to 48%. And in terms of capital gains, we are counting with 28%. This is taxed in Portugal, and then we need to trigger the double taxation agreement with the country where you are. If it is US, Portugal has a double taxation agreement with US, and see what is the situation in terms of credit that is applicable to the taxation paid. Then we have in the middle a different situation. And it's different because it's a program that brings tax advantages. And this program is specifically for those willing to move to Portugal, but also willing to perform a high qualified activity in Portugal, namely for innovation, research, science regime, academic career. So there are qualified professions for the purpose. And why it is a special tax regime? Because instead of the progressive tax rates, you will have a flat rate in the qualifying income in Portugal. Also, a benefit in terms of the foreign income, in terms of an exemption of taxation, and this will be a special regime during 10 years. So basically, you have here three situations that will depend mostly of your decision if you are doing this for relocation purposes or not. Also note that usually the Portuguese Golden Visa plan is considered a plan B, so something that is not immediate, but something that you are working on in a medium long term. So if now you are non-resident, eventually in the future you can consider it to be an HR or a standard residency. In summary, what means the Golden Visa for your family? The Golden Visa basically, as I mentioned, is a residency by investment program. With that, you have access to 29 Schengen countries because the Golden Visa card will work as a touristic visa on those countries. Means that you can spend 90 days in a period of 180 in every year. Also, it has a lot of flexibility. For keep it, you just need to fulfill 7 days a year in Portugal with you and your family. And those days, it counts with the day of entrance and the day of departure. One application, as I mentioned, and one investment gives all these benefits to your family, and at year 10, fulfilling all the requirements, which will include speaking a little bit of the Portuguese language, level A2, you will be entitled to apply for the Portuguese passport. That automatically is European passport and is one of the most powerful passports in the world according to the official rankings because it allows 190 visa-free destinations including US, Canada, UK, Japan, and of course, Schengen area. I pass the word now to Tiago Serra so that he can give a little bit of details about the investment itself.
Before we do that really quick, does anyone have questions about what Sarah said or anything they want to bring up specifically about the slides that Sarah just touched on before we move on to talking about the potential investment opportunity here with Plural? You can also drop in the chat if you have anything, and we can cover it at the end. We do have a Q&A at the end, but if you do have a question, feel free to come off mute and ask or drop it in the chat. Great. Okay. Tiago,
Thank you,
all
Emma.
you.
Good morning or good afternoon, everyone. My name is Tiago. I'm in Lisbon. I'm the responsible for the fund management division of the Plural Holdings Group. I would like you to briefly present you Plural. Plural is a financial company created 15 years ago with headquarters in the US, actually in New York, also with offices in Miami, in São Paulo, Brazil, and in Lisbon and in Porto. We are around 20 people here in Lisbon providing investment services. We do wealth management, managed accounts, and we have our own investment funds with our own investment strategy, both public and private investments. And some of the funds are eligible for the residency authorization. Not all of the funds that we manage, but some of them and you will be presented two options shortly by Fabian. In Lisbon, we are in downtown Lisbon. Our activity in Portugal is regulated. It's a financial activity regulated by the European regulation bodies. In Portugal, it's CMVM, part of the ESMA, the European Securities and Management Advisory Company. We have funds, as I said, that are open-ended and closed-end funds. We work with top-tier custodian banks. The auditors, the funds are audited by one of the Big Four. Actually, in our case, we work with Ernst & Young as the auditor of our funds. We invest in different investment opportunities. We are experts. We have a team in each of the members have more than 25 years of investment expertise. And so we are pretty much focused on generating the best possible outcomes for the capital that the clients trust us. So we work pretty much in this geographical space, US, Portugal, and Brazil. And I think if needed, I can add more details, but then after Fabian present the funds, but I will now pass the word to João from our Miami office so we can present our activity in the US.
Thank you very much, Thiago. So very much like the office in Portugal, Plural has a entire structure in the United States focused on the wealth management and portfolio management of clients here in America and everywhere in the world, but mostly focused on US investments. Also very much like the office in Lisbon, we work with public and private investments, focused on providing tailored solution to all of our clients, be that from the most conservative and dealing with credit investments and to the most aggressive directed portfolio solutions, mainly dealing with equities or alternative investments and everything in the middle. Our mission, although the service is really broad, our mission is very simple, which is helping our clients reach their financial goals, be that in terms of their family planning, sometimes helping them with their liquidity needs, understanding what's the 1, 5, and 10-year vision of all the investments and all the portfolios that our clients may have with us, and also keeping a very close proximity to all of our clients. We have specifically Plural Advisors as an office in Miami, but the Plural Group has offices in New York, Chicago, Orlando, and a couple other cities in the United States. Plural Advisors is an SEC registered investment advisor, so I was working with the biggest level of due diligence necessary by US regulators, and also working with US broker-dealers, A-tier custodians that help us create and manage the portfolios, not only and provide us the biggest access to securities that we can need or that our clients may need. And I think the focus of the entire work is essentially helping our clients to find the solutions, be that with investments in the US and setting their portfolio up, presenting them to immigration solutions like the Golden Visa solution with the offices in Portugal, and creating that network where our clients are not going to be constrained by one specific mindset or one specific goal, and helping the client reach their end goals rather than putting them into a production line, and working a lot more client facing than business facing.
Thank you, Joao. So basically, to continue, I'm going to introduce you to the funds that are qualified, are currently fundraising for Golden Visa. But before getting into the funds, I wanted to share with you some insights, some macroeconomical insights about Portugal and the US. The US is very well known that the US Treasury, the governmental bond of the US, is the safest asset in the world. It's considered risk-free. That's how it's used in finance. But also the Portuguese bond, the Portuguese governmental bond, is actually pretty safe. I want to share why. Portugal has improved over time, especially since they entered in the European Union. In the last 20 years, they have lived a boom in the economy, consequence of policies such as the Golden Visa, but not only that, consequence of tourism and services. And that has consequently of that, the debt of the government over the total GDP has passed in 10 years from 135% to 95%. That means that the bond that the Portuguese government is offering is also improving the rating and also the risk. Therefore, our main fund, the one that is open, invest 60% in Portuguese bonds that I had just explained that the risk profile of the country has been improving, therefore is very risk adverse, and 40% in US treasuries, meaning US bonds. This is fully open fund, very traditional, focusing capital preservation, as we have seen that in our experience, golden visa seekers, the principal motivation that they have is to preserve capital in time rather than seeking extraordinary returns. Therefore, we have structured this fund with fully capital availability. We understand that life changes, plan changes. You might have another option later in the future and you want to take your money back. Therefore, this is a fully open fund with no exit fees, meaning with a 30-day notice, you can take your money out. The way that it's structured in terms of fees is 1.5% subscription fee and 1.5%, 1% management fee per year. Those are all the fees. And considering that this is a bonds fund, of course, the return is very market standard in bonds. Its net of fees is projected to be 3.23%. This is like having your money in the bank, basically. But of course, the focus of this fund is not on the returns, is on the capital preservation. Okay, and capital preservation and availability of your funds anytime without exit fees. This is one of the difference against what is offered in the market. On the other hand, there's another fund that is a closed fund that is called Global Opportunities Fund. It has two components. 40% invests in the S&P 500. We all know the index is the most traded index in the US. It's basically compound in the majority for the Mag 7. The Mag 7 are the largest 7 technological companies in the world, meaning Meta, Google, Nvidia, etc. So this is publicly traded, this 40%. And then the other 60% is private credit. But private credit actively managed. I will explain this better, how it works. We mainly invest in three industries: energy, healthcare, and industrial. There are industries that keep running no matter what. And what happens in Europe, contrary than in the US, is that these industries are managed in a traditional way by family businesses, EBITDA positive, very stable businesses that currently are facing several opportunities. With the introduction of AI and new types of doing businesses, they need to face these changes. So what we do, we lend them money and we actively take management of the company in order to help them implement these new technologies inside the traditional business. Okay, so that is the thesis. In the base case, they pay us back the money with the interest rate. We have done deals in which the interest rate goes as high as 15%. And in the base case scenario, at the end of the 5 years of the loan, the owner also wants to sell the company to retire most of the time. And we also help them to sell the company. We have done that several times. We help them to sell the company and we take a percentage of the sale. That is called equity kicker. So in the base case, when we lend money, they pay us back during 5 years while we help them to manage their companies and implement digital transformation changes. And in the best case, we also take a percentage when they sell the company in year 5. In this second fund, it's a closed fund, but even though it's a closed fund, 40% of the fund remains liquid, meaning you can take it out in form of dividends. The amount that is invested in the S&P 500 can be taken out at any moment with a 30-day notice and exit fee. And in terms of fees, this fund has 1% subscription fee, 2% management fee during the investment period, that is the first 2 years. And from year 3 until year 5 is 1.5% management fee. In terms of gains, the returns of the fund, the gains of the fund. Once we return your money plus 5%, the differential from that onwards, we retain 20% carry. That's the carried interest. On the other side, on the debt fund, on the sovereign debt fund, we have no carry. We don't take any part of the returns. In this fund, considering that we expect to generate substantial larger returns, we take 20% from the returns from the moment that we give you your money back plus 5%. Okay, so these are two funds with different risk profile and of course different return profile, but we have structured them in a way that they can go together. Because as Sarah was explaining, you can diversify between funds. You are not forced to invest all your money in one fund. Okay, so what we have structured here in a way that you can invest 50% of your money, we call this the 50-50. You can invest 50% of your money in each fund. So 250,000 in fund one, focus on debt, on sovereign debt, and 250,000 in fund two, focus on our strategy in private credit and the S&P 500, basically technology, right? What this allows? This allows to balance the risk while allowing you to have 70% of your money liquid. So 350,000 stays liquid and 150,000 are locked during 5 years, meaning you only receive them back in year 5. The expected returns of this bundled product is 6.97%, almost 7%, considerable higher of the fund that is just focused on debt, that is as basically as leaving your money in the bank, right? So this is focused on what we have seen golden visa seekers are looking for in the market. That is capital availability and capital preservation. Okay, so all of our investments in the private credit have a collateral that is the receivables of the company. In case that the company doesn't pay, we will take the money of the clients of the company. Therefore, this is a very risk-averse strategy. We don't invest directly in companies in equity. We invest, as I was explaining, in sovereign debt, Portuguese sovereign debt, that is one of the best qualified debts in Europe, considering improvements in the Portuguese economy, US Treasuries, S&P 500, that is the largest 7 companies in the world that powered by AI will be growing during the next 5 years. The expectations of the S&P 500 are very bullish over the next 5 years. So it's a good time to invest in the S&P 500 and private credit with collateral on companies that we take active management. So we can see if something is going wrong in time. We can help them fix them. It's not that we invest in the company and we forget we are not a bank. So these 4 strategies, complemented together in a portfolio, are built for capital preservation and also to avoid taking major risk while generating a return during the 5 years that you need to hold the money. Now I will pass the word to Raquel to explain more about how is the onboarding process.
Thanks, Fabian. Hello, everyone. Very nice to meet you all. At Plural, we have a structured onboarding process. The first step is a discovery call where we assess your profile and investment allocation to obtaining the golden visa. Next comes the documentation where we request essential documents as a passport, proof of address, proof of bank account in the country of origin, proof of financial capacity, and subscription documents. At Plural, the investor do not need to open a bank account as we open with each an investment account. Typically, with the correct submission of documents, this stage can take only 2 or 3 days, depending only on how promptly the investor provides the required information. Then, after the analysis and the validation, the documents are sent by DocSign to the investor, allowing the fund subscription to take place and go on. Once the transfer is confirmed, we issue the declaration for AIMA, enabling our legal partner, private legal, here with Sarah, to prepare the application process. Finally, there is a biometrics and car insurance where AIMA schedule the appointment and the residence car is insured, as already Sarah explained here. At Plural, we provide an individualized support to each investor, okay? The ensuring the continuous assistance and personalized experience at every and all steps. Thanks, Fabian.
So now we will pass to the Q&A part. So I will allow Emily you to take the lead on this. If they want to have any question in the chat, or if you want to take the word, please.
Yes, it looks like there is a question from Tim. He asked, is the 6.97% return after all fees on the split fund? And also, do all funds need to remain invested the full 5 years of the Golden Visa?
So let me ask you the first part of the question, and then we can pass to Sarah.
Right.
Yeah, the 6.97% in the bundle of 50/50 is net of all fees. The same, the 3.4% in the sovereign debt is also net of all fees. And depends on basically the amount that you have to keep the funds invested. Depends if you want to qualify for the golden visa or not anymore, right? The law, according Sarah can explain this better, but you have to leave the money in the fund for 5 years in order to qualify for the golden visa. Now, if the plan changes, as it can happen in any family, and you don't want to follow that path anymore, you can take the money out in the open funds and in the layer of the S&P 500 on the closed funds. That's why I was mentioning that in the 50/50 fund, 70% of the amount remains liquid. This means that you can take the money out at any time during the 5 years, but you will no longer qualify for the golden visa. Okay, so that is the difference between open and closed funds, and we offer both types in the 50/50 bundle. We make a mix in order to maximize returns while also keeping 70% of your money available anytime during those 5 years. Of course, if you keep the money until year 5, you will receive the full amount plus the returns that were generated.
So if you did withdraw, what's the withdrawal fee?
Okay, of course. In the sovereign, let me go back, please, to the slides. In the sovereign debt, that is the fund basically investing in bonds, there's no withdrawal fee, there's no exit fee. The only fees is the 1.5% subscription plus 1% yearly management fee. So there's no withdrawal fee. And there's no carry fee as well. Those are the only two fees in the debt, because of course it's a very stable traditional fund generating minimum returns. In the global opportunities funds, is the fee is 1%, the exit fee. If you want to withdraw the money, there is 1% withdraw fee. And the other fees is 1% subscription, 2% management fee yearly during the first 2 years, in which we are proactively investing in the companies, like looking for the companies to invest. And the year 3, 4, and 5 is 1.5% management fees. Those are the fixed fee, and now the variable is 20% carry that is charged only after we give you the full amount that you invested back plus 5%. 5% is called a hurdle rate. It's 5% the amount that you put plus 5%. And from the extra returns above that 5%, we will share it 20 us, 80 you. That's called 20% carry.
Thank you. The 9.8% return, what's the history on that? Is that like a 10-year average return or? How does
Yeah,
that
that's a
work?
10, exactly. That's a 10-year average return,
Okay.
based on the basically public returns on the S&P 500 in the 40%, and also weighting with experience that we have in private credit in Portugal in other deals that we have performed.
Okay. Perfect. Thank you.
Thank you, Tim.
And then your last part of your question, Tim, the funds remaining invested for the full 5 years is a requirement of the Golden Visa.
Yeah, he got on that, and I
Okay,
appreciate
great.
that. Thank you.
You're welcome. And we've got another question from Erica. Dr. Erica, what if you end up purchasing a Portuguese property during those 5 years and want to use those funds to fund that property? Erica, do you mind sharing a bit more about this particular situation? Because are you meaning like the 500,000 that you'd want to pull out or the returns?
Just the returns if there was enough.
Okay. Fabian, do you
Okay,
have,
let me
yeah.
try to get the question. What do you here?
So
How to use those?
she's just asking, like, are you able to receive the returns like regularly throughout the 5 years on either of the funds, if they wanted to use it for something else, like a property purchase or something like that?
So basically you can receive, basically there are two options in order to receive the funds back. At year 5, we liquidate because these are market positions. Basically, we hold bonds that are publicly traded. We can trade at any time. Like the most liquid bond in the world is the US bond, and the Portuguese bond is also very liquid. So we can trade at any time. That's why you can take out the money anytime because it's a very liquid asset. Um, but we hold it during those 5 years in order to maximize the gains of the bonds. So we hold it during those 5 years and we only distribute gains plus capital in year 5. The way that you can take your money out during those 5 years is taking your money out of the fund, but therefore you will no longer qualify for the golden visa, okay? Because any money that is gained during 5 years of those bonds is reinvested on the fund. So the interest of the bonds that is gained, the coupons of the bonds that is gained during those 5 years is reinvested on the fund in order to maximize the return of the funds. I don't know if it answers your question, Dr. Erica. Yeah, thank you a lot.
Any other questions? You're also welcome to come off the mute if you have any specific questions about what happens next or what are, good next steps. I'm happy to review those as well, but let us know if there's anything else that we can help answer.
Yeah, also to clarify, we will follow on these.
Yeah.
There's a question here.
Yes, iPhone. I'm not sure who you are, but
Sorry.
welcome to introduce yourself.
Yeah. Hello, everyone. My name is Carlos. I'm from Ecuador. I know very well to Fabian. I had just have a simple question. What happened after the fifth year? I already invested. You guys gave me the money back, but as I've heard, basically in 10 years I'll receive the nationality of Portugal. What I do at year 6? What is the next steps after that?
Sure. Sarah, would you mind jumping in on that question?
Of course. So, in terms of the Golden Visa application, after the initial 5 years of the Golden Visa, there is then a 5 year card that is called the Golden PR, Golden Permanent Residence. That card does not request investment and also only requires the 7 days a year for you to maintain it. So that is your bridge until the 10 years to access citizenship. In terms of the funds and the fund duration, Fabian can clarify, considering that we are speaking here about an open fund and a closed one.
Yeah, exactly. That's in terms of the visa. In terms of the fund, at year 5, you can legally withdraw all the money from the fund while keeping the golden visa. So we can pay all the money back, exit the open positions because one fund is open. So we can exit the open positions of the fund and distribute the capital plus the returns. Or, of course, you always have the option of keeping the money invested or partial or part of the money invested with us part of the money redistributed, that is going to be completely up to each of the investors. But having said that, you can always keep your investment with us if that is your willing, or you can completely receive the full investment back in year 5 in the open fund. In the closed fund, it has a maturity of 5 years. So the fund will distribute the capital and the returns in year 5. But of course, we are always opening new funds. So you want to continue investing with us, you are more than welcome to do it, but it's no longer required for the longer visa purposes.
Thank you.
Fabian, let me add, we have funds that are liquid, so you can withdraw, you can sell the shares of the fund anytime. Of course, if you sell before the 5-year period, you lose the access to the card. We have other funds that are closed, in which there are independent valuations twice a year, in typically the end of June and end of December. The valuations are normally done by the auditors, the Ernst & Young team. And based on that valuation, you can also sell the shares of that specific fund. But in that case, you have to give a mandate so that Plural can sell your shares within its client base, and before the maturity of the fund, because typical maturity of a closed-end fund, it's 10 years. And if the investors want to sell before, it's a private transaction in a secondary market. Okay, that's the main difference. We have both types of funds in our under our management here at Plural, but in order to keep the visa intact, the possibility of having the card after the 5 years, you have to keep you have to keep the investment alive until the end of the 5th year.
Thank you, Diego.
There's one question in the chat on Lincoln. Let me answer this. The qualifying amount for Golden Visa is 500,000 euros. So that's the total amount that you have to invest. But it's very important what Sarah was mentioning. You can always diversify across funds. Okay. So that means that the total amount that you have to invest in Portuguese Golden Visa qualifying funds is 500,000 euros. But what you have here, 100,000, 250,000, is the minimum amount that we accept per fund, because you can pick 5 funds and put 100,000 in each fund, right? But for that, each fund has to accept a minimum investment of 100,000. So in this case, one of the funds accept a minimum investment of 100,000 and the other of 250,000. Okay, but this is fund, only fund, but the total amount that you have to have invested in Portugal is 500,000.
Amazing questions, everyone. Thank you so much for those. And I will go over next steps really quick, and then if anyone else has questions, please feel free to drop them in the chat or raise your hand, and we would love to go over it. But essentially, next steps after this is I will do 2 things. I will drop a link into the chat to schedule a discovery call if you want to meet with the team, ask some more specific questions based on your situation, or learn a little bit more. And we can answer those in that time. So I will drop that into the chat. I'll also reach out to you directly. Oh, we do have one question. I'll also reach out to everyone directly, so you have my contact information, and you'll be able to reach out when the time is right or when you're ready, or if you have questions in the meantime and are just not ready for a discovery call. I will be kind of your main point of contact to make sure that you stay connected, and if you need any additional information to get started or things like that. But we do have one more question, and Tim is asking if siblings qualify.
No,
Sarah.
unfortunately,
Yeah.
no. In terms of family members, just spouse, parents, parents-in-law, and children.
All right, awesome. Thank you.
But if your sibling also wants to come, we can help them as well. So everyone can come. It'll just be separate visa applications and separate investments.
Yeah, makes sense, but thought
Yeah.
I'd ask.
Sure. Any other questions? I will drop the link into the chat for scheduling a call, a discovery call if you would like. But again, I'll be reaching out to you. Most of you should have my email already, so feel free to reach out to me anytime. Some of you registered last minute, so I haven't reached out to you yet, but I sure will. And if we'll also have the recording of this, so if you want to share it with anyone, I'll be sending that out so you have access to it. You can rewatch it if you need a refresher. So thank you everyone for joining, and we look forward to meeting with you all soon.
Thank you so much, guys.
Thank you.
Thank you.
Bye.
Thank you.
Thank you, everyone. Bye bye.
Thank you. Bye bye.